Good morning everybody and welcome to this Smart Charts European session. I hope you are all well. Alright, so we had some key economic news announcements out yesterday on Monday. We went through the update. Actually did cause some good opportunities in the market flows and the big themes that we have been trading this week so far, in particular the yen pairs, some of the weakness in the commodity currencies. So it was a good trading day yesterday. It was on day 3 of the trade certification workshop. So we banked some decent gains. So let's see how the rest of the week develops, especially as we get into the higher impact news announcements come Wednesday, Thursday, where we have 3 central bank news announcements. And this is why we like to get a lot of trading activity done in the early part of the week, because when we get into the higher impact news announcements later on in the week, then it might be a bit too volatile to even place a trade. So, we want to make sure that we're fully focused on the opportunities that the market is actually presenting to us. So today we have Canada CPI, and that stands for Consumer Price Inflation. Inflation measures the change in the goods of price and services. And it's a very important metric because it's used by central banks to determine interest rate policy. Now, there are no changes expected in last month's CPI print, but it is an interesting one because Canada, last week, the Bank of Canada cut interest rates. It was a 5th consecutive interest rate cut, and we've had a lot of weakness in the Canadian dollar, in particular against the US dollar. If you look at the chart of US dollar against the Canadian, it's been rocketing higher, and we've also had some good flows in Euro Canadian, Pound Canadian, which have all been going up. And all that, as those exchange rates go up, the first currency in the pairing is strengthening, second currency in the pairing is weakening. Okay, so we've had a lot of CAD weakness against those currencies. It's a bit mixed in some of the others. So Aus CAD a bit sideways, New Zealand CAD a bit sideways. That's because Aussie and Kiwi are also weak as well, right? Because commodity currencies generally have been quite weak. And if you're not familiar with what the commodity currencies are, they're Australian dollar, New Zealand dollar, Canadian dollar. And they're regarded as commodity currencies because they derive most of their income from the export of commodities, okay? So we've had a lot of weakness in the commodity currencies. So we'll keep an eye out on any potential further weakness in the Canadian dollar. But again, it is quite far into the move, so great if you're a fast time frame intraday trader looking for the trend to continue. But medium to higher time frames, you may be waiting for Canadian to get into some big levels. Maybe look for some profit taking, phase 2, some trend reversals to potentially develop as well. Okay, so let's see how the market responds. Remember, we don't try to predict what's going to happen on a news announcement. We don't try to chase a trade. First of all, we manage risk. All right, just make sure we don't have too many trades on the Canadian dollar in front of that high impact news announcement in the afternoon. Second thing is we look for any surprises. Are there any surprises to what the market was expecting? Because that can lead to some really big moves, which sometimes not tradable, but sometimes they are. And that's our job as traders, to look for the different clues the market is presenting to us. It could be technical clues, fundamental clues, news-based clues, but it's about stacking all those clues in our favor and getting that edge. For now, let's dive into smart charts and let's get an update from a technical analysis perspective. Okay, so we look at the tools tab here. So again, as we can see in the currency strength index, we have general weakness there in the commodity currencies. You can see, look, New Zealand dollar, Aussie dollar, Canadian dollar, all relatively weak. So we will be looking for some trend continuation in those commodity currency pairs and just looking to sell the weakness and buy strength. Because remember, currency pairs, they're paired. When one currency is rising, the other one is falling, and vice versa. So for fast time frame intraday traders, you really want to be buying the strong currencies and selling the weak currencies. And for more medium to high time frame traders, you may be looking for those really strong ones or really weak ones to maybe come to an end of a trend at some point and look for some phase 2 or some trend reversals. Okay, so this is why on the phase changer strategy, there's been some interesting developments there. Let's take a look. Okay, so here we are on the daily chart 180 phase changer. One of my favorite strategies, actually. It's one that we go through on your 3-day trade certification workshop, your Learn Forex program. And it is a strategy which is really useful in helping to identify any momentum trends developing in the market. And it utilizes moving averages, the yellow line and the blue line on the charts, and a relative price pattern known as ring highs and ring lows. And in this instance, what we want to be doing is utilizing what smart charts is finding, but also incorporating some human insight pattern recognition. Okay, so it's the combination of those things which are very, very powerful. And if you're not familiar with how smart charts is helping you and what it's looking for, then make sure you're viewing all your e-learning materials in the learn section of smart charts, attending all your online classes, boot camps, webinars, workshops, live trading days, and also your coaching sessions as well. Okay, but we just need to look for a couple of things to give ourselves even more of an edge in what smart charts is finding, and we just look for additional clues. Okay, so first of all, for me, I like to use moving averages. Now, not everyone does, but I do, and I particularly like to trade in the moving average zone. So what is the moving average zone? Well, basically the moving average zone is being on the yellow line, on the blue line, anywhere in between that is the moving average zone. In a downtrend, we consider that to be the sell zone. In an uptrend, we consider that to be the buy zone. It just gives me a focus, because I can say, okay, if I'm in this zone and I can see that maybe buyers or sellers have been turning up here before, it gives me confidence in trading in the zone again. Okay, so in this instance, this is why I like to trade in the zone, because it just gives me that focus. Now, what we can see is we are in the zone, which is great. But we can also see we do have this angle of price kicking in as well. So if we go to this pencil icon on top right of smart charts and click this ray tool, something you can see here is that price, look at all this, look at this high point here, look at this high point here, look at this high point here, look at where this bar closed, look at this high point, it peaked up a bit, came down, closed below it, look at this high point here, you've got 1, 2, 3, 4, 5 bars at this angle of price where sellers have been turning up, and lo and behold, where did we stop yesterday? On that line. Literally, the high of yesterday was literally on that line. So if you're a master trader and you're using these daily levels, okay, to get into bigger moves, but then using master trader time frame correlation strategies, so you're going down to the lower time frames to get involved in the move, you might already be in that and might already be up 2 to 1, 3 to 1 reward to risk, right? And if you're trying to run it down to these low points, that's how we get those really big high reward to risk trades. But as a beginner trader, it's all about getting into the right trades first of all, just making sure you're reading the market correctly, learning how to deal with the emotional side of trading, the wins, the losses, being right, being wrong, getting to build that probabilistic mindset, which is so important. But what we have here is a confluence of resistance areas where sellers have turned up before, so maybe there's a high probability chance they could turn up here again. We can also see we have more of a complex cycle structure, and what you'll notice is we have what we call these lower low, lower high cycles that developed at the top here, big move to the downside, and the way the market has been coming up is a bit more complex, and that does tend to happen, okay? For anyone who studies Elliott wave theory, again in Master Trader, you'll know that if trends start off in a simple cycle structure, then sometimes they can go into more of a complex cycle structure, and vice versa. If a trend starts off a bit more complex, then further into the trend it will become a bit more simple, okay? So in this instance, we're dealing with more these complex structures where we have a few more cycles in this what we phase 2 move, in the pullback to the trend line. And that's okay, but what we like of the fact is, look, we are actually topping out here, aren't we? Look at this daily high point, this daily high point, and now we have stalled at that daily high point. So we have a combination of resistance areas all converging around the same place, and that's what we look for, confluence, all right? So on top of helping to identify the potential trading opportunity, smart charts will also help the risk management side as well. If you click the down icon, populate an entry price of the blue dot, stop loss of the red dot, target the green dot. And these can all be adjusted according to your own user preferences. So for example, we can see that, look, if the market did come down to these low points and continue the trend lower, then there's a high probability chance it can get down into maybe some of these multi-month low points at the bottom, okay? We don't try to target right at the lows, we've got to give a bit of margin for error, okay? So in this instance, we know that market might want to come down to this area here. We can squeeze out a little bit more of a higher reward to risk on the trade, especially because we already know a lot of the yen pairs are driving lower. Because we have been trading these phase 2 moves, these pullbacks to the trend lines. We were trading these yesterday. in the trader certification workshop, we had some really good trades that went to the target level on the faster time frames, trading these moves back to these trend lines. But now on the higher time frames, we're at the trend lines, and now we're looking for the trend to continue back down. I also like to set an expiry. Okay, now the key there, even though you can adjust all of your levels to your own user preferences, the key though is to make sure you keep the risk low, okay, and make sure you're able to deal with the random distributions of wins and losses that develop throughout the day, throughout the week, throughout the month. But I like to set an expiry of the current bar close and decline or accept the trade here at the bottom. And basically what that means is if sellers don't turn up and continue this move lower, as they've been turning up here on multiple occasions before at the levels that we've just highlighted, then if they don't turn up and go to the entry level by the close of this current daily bar, this pending trade will expire, didn't win, didn't lose, didn't cost anything. But if they do decide to turn up and go to the entry level, that'll trigger into a live open trade, then either it goes to the target level or it goes to the stop loss level. So either it turns into a winning trade or a losing trade. So there are plenty of other different trading opportunities developing right now and throughout the day. So make sure you're tuning into all the other live trading webinars to help you identify and participate in them as well. But for now, that's it from me. I'm going to wish you all the best for your trading. I'll speak to you next time.